Is this the year to finally swap your current non-performing property to one that can have better growth? Or do you think now is the best time to hunt your best home or investment because there are lesser competition? Maybe you have put your upgrading plans long enough, citing the increase of prices, and you see the opportunity now? My views on Singapore property beyond 2022 coming up.
So the big question is this: how busy professionals and homeowners like us make six-figure profits from the property we own safely by doing it with research, data, and numbers. How do we buy in a way without complications and half-guessing, regardless of the market conditions, and still remain profitable? That is the question. Here, I will share with you exactly what we do and how we do it. My name is Edmund, and welcome to Singapore Real Estate Insider.
Hello everyone, Edmund here, your Singapore Real Estate Insider. What is a better way to do a video on my views about Singapore property market beyond 2022 and which profile of homeowners and investors can crush it? And speaking of crush, if you have not liked or subscribed yet, this is the best time for you to smash those buttons and always be updated about property. Now, with the latest cooling measures announcement on December 2021, I have gotten enough research, and my own take on how we as busy professionals and homeowners can benefit from the news. So there are 3 winners and 3 losers because of the latest news. I'll put a video somewhere you can go watch. Coming back, in general, the growing economy will likely improve market sentiment and boost buyer confidence. So how will the market perform and what are the key trends to watch? Number 1, the supply crunch to weigh on the market. Due to the fact of an influx of HDB upgraders buying condominiums in the suburbs and city fringe this year, many homeowners sold their flats to capitalize on the rising resale flat prices and are looking for replacement homes. There are others who fear prices will climb further when economy starts to pick up, which is already underway. That is why we are seeing breeze sales in the private sector too. Many condominiums from the last collective sales cycle has been launched. Sales will breeze across many projects, and the unsold private housing inventory has dipped to a nearly 4 years low. Also, the supply from the government land sales, GLS in short, was moderated over the past 2 years to keep pace with the uncertainty economic outlook because of COVID situation. Thus, we start to witness En Bloc movements earlier this year as well. The number of new project launches is expected to slide further next year. Now, less than 30 projects could be launched for sales, which is in stark contrast to the over 50 projects launched in 2019. Now, close to 9,000 units, including executive condominiums, may be released in the market, and this is about 17 to 20% lower than the annual numbers in 2019 and 2020. What this means is that the property sector is turning into a seller's market, where homeowners have the upper hand in setting prices. Moreover, the construction costs have spiked up on the back of a workforce crunch and higher building costs. Therefore, private home prices may rise further by 6 to 9% next year. And on the other hand, sales volume may dip by 10 to 15% since fewer units will be launched for sale and price resistance may occur in some areas. Now, if today you have an existing property and the value have not risen much over the last couple of years, you may want to do a performance check of your property and if keeping such a property is a good idea or not. Many times we never see the blind spots when making a decision. Example like our age tenure, opportunity cost, and the kind of leverage you can do it when you're younger. And without you realizing, you could be outliving in a property, causing the property value to slow down, resulting in decrease of prices as well. Now, you must always remember, every property has an expiry date, and you want to get out before it happens. Point number 2. There's going to be a rebound in the rental demand. While the property market may face headwinds like more property curbs, uncertainty due to the pandemic and inflation, some positive factors may mitigate this risk. For instance, the rental market may bounce back strongly next year when air travel is going to be restored. Vaccinated travel lanes have been established with more countries, and more foreign expats have their routes into Singapore. Business partners and students could also return during this 2 years absence. The expansion of Singapore's border reopening may spur employment growth for foreign expats as well, and hiring prospects may improve in sectors like aviation, MICE, which is meetings, incentives, conferences and exhibitions, hospitalities, as well as tourism. The vaccinated travel lanes at the causeway may see stranded Malaysian workers returning back to Singapore, which may uplift the rental demand in the suburbs and public housing segments in a longer run. And amid a tight supply of completed homes and robust demands, rents may rise at a higher pace of 8 to 11% next year, and leasing volume may climb by about 3 to 4%. Now today, if you have invested in a property for rental, now is a good time to review what's the plan for the next 3 years. Even though you could be getting rental from it, ask yourself, has the surrounding rates increased to cover part of your mortgage? I've heard horror stories of $6,000 mortgage, but the rental is only $2,800. So don't let that happen to you. Just recently, we managed to increase $500 rental for our investor when we review for the next contract, just by touching up the unit with fresh coat of paint and complimentary minor repairs for the tenant. Now you must always remember, the better the tenant upkeeps your property and keep them in good condition, the less work you do later when you intend to sell for a profit. Staying ahead is what we always suggest and plan for our investors. Number 3. What are the key launches to actually look out for? There will be some upcoming project launches could grab some headlines. AXA Tower opposite Tanjong Pagar MRT station in Shenton along Cecil Street will be redeveloped into a new mixed development comprising of residentials and office space. New projects at the former Maxwell House and Marina View, the white site could be launched within the same vicinity in the second half of next year. Downtown Core has been gaining traction as a new hotspot for luxury homes in recent years. The area is set to benefit further when it's rejuvenated alongside the planned development for the Greater Southern Waterfront. An upcoming EC project in Tampines Street 62 by Cindior Realty, and 2 leasehold sites, a private residential development with commercial space at Lentor Central, as well as the private housing estate in Ang Mo Kio Avenue 1 opposite Bishan and Ang Mo Kio Park. This will actually create another new set of new launches in the future. This will be all keenly watched as this project could set new benchmark prices in those areas based on their record land prices and attractive locations. Other residential projects may draw buyers' interest, like B Live at MB in Arthur Road, the Polian Collection, which is in the 3rd phase of Strata Landed Houses to be launched in Nim Road, and the redevelopment of a sprawling hilltop site at the former Caldecott Broadcast Centre. While we are not seeing as high volume of launches compared to 2017, there is still a need to have enough to upkeep the property market to rejuvenate from the older properties to the newer ones. As buyer behaviours for younger generation changes and previous TDSR and LTV measures have set certain boundaries, we will still continue to see new launches being snapped up if they are priced right correctly and in a good location. This will be the best for those who have yet to experience staying in a new property before, with the new design outlook, updated facilities, and a younger community in general. I have a video that I show using data and numbers why are new properties still favourable in today's marketplace, even though the prices and PSF seem to be much higher compared to a resale. And there is a logical way of looking at it. I've shared this in our private groups previously, and look around, you should be able to find the link somewhere else. Number 4. The pickup in collective sale activities. After a 3 years hindrance, the collective sale market could see a revival as many developers are keen to replenish their land bank. Recently, 2 freehold sites in Thiam Sui Avenue were sold for 850 million to a joint venture between Hoi Hub Realty and Sunway Development, which is the biggest housing site sales since 2018. A few other developments have been transacted this year as well, including Flint Park in Pasir Panjang that was sold for 371 million in September to a joint venture between Hoi Hub Realty and Sunway Developments, and Wharton Estate Condominium in Bukit Timah that was sold to a joint venture between UOL Group and Singapore Land Group for 550 million in October. These collective sale deals indicate that land-starved developers are on the lookout for good land sites to shore up their land banks. Many developers have been paring down their stocks amid the brisk new home sales. The collective sale markets will be impacted by the 2018 cooling measures and the pandemic, because less than 10 collective sales were closed in 2020, whereas more than 30 deals were inked in 2018. Although we may not experience a collective sale frenzy like the one we've seen in 2017 and 2018, the recent activities could be the start of more to come. A growing number of collective sale sites have been launched for sales, including Thomson View Condominium, Hillview Terrace, International Plaza, Elizabeth Towers in Orchard Road, La Ville at Tanjong Rhu, Lake Point Condominium in Jurong, and Chuan Park Condominiums in Lorong Chuan. Now, well-located and reasonably priced developers may see higher chances of collective sale success moving forward. So there you have it, my views on Singapore property beyond 2022. And I have also just updated my views on the latest December 2021 cooling measures. I've spent a lot of time understanding how the measures are going to affect busy professionals and homeowners like you to move forward. Most importantly, how we can take these measures and emerge winners in the end. I leave the video somewhere you can go watch. Don't forget to subscribe to our channel and hit the bell button so you'll be notified of our latest videos. And if this video helped you, give it a thumbs up and a like. And you can actually comment what are the other topics that you would want us to discuss, and we can actually make them for you in the future.